Charity. So on this evening's program, a commodity crash pulled the indexes lower today, though tech and telecom did rise nicely. Now look, a stronger dollar and widespread expectations that the Fed tomorrow will come to the end of the easy money road. Rate hikes are even priced in now for 2009 next year. Key sectors like coal, gold, energy, chemicals, metals, all of them nosedive today. But on the brighter side, tech provided good stock market support with Apple, IBM, Yahoo, Google, Motorola, Corning, and Quest all big in the green. So gold dropped nearly $20 to finish at $877. Crude oil dropped $3 to $115.5. The dollar index rose 0.5% to nearly 73 on the index, and Dow Transports also up very nicely today. And did President Bush whiff on ethanol and the dollar? Obama throws Reverend Wright under the bus. Lots to talk about. Let's get right to it. We have Don Luskin of Trend Macro, Joe Battipaglia, Stifel Nicholas, Kudlow & Company contributor, Jerry Bowyer, Benchmark Financial Network, and Herb Greenberg, CNBC contributor, senior columnist at Market Watch. Gentlemen, welcome. Don Luskin, it looks like a game-changing event. It looks like there's a sea change going on in the marketplace. It looks like the mere hint and possibility that the Fed is coming to the end of the easy money road, that the U.S. peso may turn back into the U.S. dollar, is knocking gold down, knocking commodities down. Now, I believe you have something to say on this subject as you have in the past.
I've had something to say on this subject for the last 6 weeks. This all turned around on Bear Stearns Monday and FOMC Tuesday, March 17th and March 18th. On March 18th, the Fed defied market expectations by cutting only 75 basis points instead of 100. The day before, they'd introduced all kinds of wonderful new credit facilities to deal with the credit crisis directly. That takes the worst-case inflation scenario off the table. That's when gold topped out at over 1,000. That's when the dollar bottomed. The world changed then. That's when the dollar turned around. That's when stocks turned around. That's when commodities turned around. That's when the recovery got started. The Fed needs to follow through tomorrow. They need to cut no more than 25 basis points, ideally zero. They need to at least signal clearly that they're going to pause. Ideally, they need to signal that they're going to halt. And let me tell you, if they give a negative surprise, if they cut rates by zero, and if they say, we're done, that's it, just think, 3 months ago, that would have been Armageddon. The Dow would have been down 1,000 points. There may be a brief shock if they do that, but within 24 hours, if they do that, the Dow will be up 1,000 points. Mark my words.
Well, it's very interesting. We're going to put a chart on the screen. Money market rates are now pricing in a higher federal funds rate, if not by the end of this year, certainly well into next year. In fact, it's already pricing in a 75 basis point interest rate hike in 2009. It also is pricing in a 2%, which would be 1/4%. So, Herb Greenberg, what do you think about this new Fed king dollar scenario that seems to be unfolding? A sea change with commodities down across the board. I mean, it's interesting. You can look everywhere. I mentioned the gold. Gold dropped quite a bit today. Weyerhaeuser, U.S. Steel, Baker Hughes, metals and mining, Herb, Alcoa, Allegheny, chemicals, Archer Daniels Midland. You know, all the hot basic material stocks plus all the oil energy-related stocks all got slammed and have been looking pretty shaky. What do you make of this? First of all, do you approve of one and done and a king dollar?
Well, it's just Tuesday, Larry. Do I approve of it? Yes. I've never been a big fan of sliding rates here. I've talked about it being pushing on a string and the rest of that. Now, here's the question. To really right this economy, to really get this thing done, don't you still have to have a total, really a total washing out of a situation that could come with rates rising? But let me ask you a question. I'd love to know what my friend Don Luskin thinks of this one. What's to say that rates don't start going up and going up and going up to really right this thing? How high is too high? I mean, we're starting to reverse the trend. I just want to know.
Don Luskin?
Well, I can tell you this. We're probably going to 2% tomorrow, and that's too low. There's no reason to be at 2%. If you look back at the history over how the Fed got to even a 2.25 where we are today, a lot of that was a mistake. A lot of it was bad judgment, because they should have put targeted credit facilities like the PDCF in place last August instead of last March as a force majeure measure to deal with the Bear Stearns problem. The rate cut in January, that emergency intermediate cut, That was an accident. They did that because they thought world markets were collapsing. They didn't even know that it was a rogue trader at a single bank in France. So we have gotten where we've gotten as a result of stumble-bum errors by the Fed. They finally groped their way through the darkness, found a way to get it right. We need to take back those errors. We need to get back to something that looks like equilibrium interest rates. And we are miles away from prohibitive rates that would slow the economy. Miles away.
Isn't it interesting that they were doing this for the stock market? They were trying to intervene in the stock market. This seemed to be a Fed tied to the stock market, and now it's interesting. You're going to turn it around, still tied to the stock market, up 1,000 points according to you, which I don't disagree with that that's a good thing, Don. I don't know if it's going up 1,000 points, but the question is, could this actually, in order to really right things here, could it end up really actually still hurt? When I say hurting the economy, we're going to see a lot of damage before it's all done.
Let's bring in, we got a couple of other panelists here. I want to get them in. Joe Battipaglia, you've been very discouraged about the economy. You're looking for a recession. We'll get a GDP report tomorrow. Actually, for what it's worth, the consensus actually shows a slight positive of about 0.5%, which would be quite similar to the fourth quarter. President Bush today in his news conference still refused. I mean, reporters are asking him, why won't you call it a recession? And the president wisely held out because the evidence is not clear that it is a recession. But, Joe B., we did get some lousy news today. The Case-Shiller Housing Index down 13% year-on-year. We'll put that up on the full screen. And we also got one of these Realty Track foreclosure reports that shows big foreclosures. I'm sure Herb knows about that down there in Southern California because that's where a lot of the foreclosures are. So, Joe B., what do you make of this Fed's one and done? Do you think that's the right policy? Do you think a return of King Dollar is the right policy? And in view of the weakness in housing and so forth, is the King Dollar policy good for stocks? Because commodities are going to take another hit. We got a gold chart, we'll put it up in a few minutes, that shows a real breakdown below technical support. Gold could drop another $150, $200. So, Joe, first of all, King Dollar, is it the right strategy for the Fed in view of the continued housing decline?
King Dollar would have been the right strategy. Of course, they punted on that a while ago. As to the president, it's really politically unacceptable for a president to say we're in a recession. But the fact remains that the economy is extraordinarily soft.
Are we in a recession, Joe? Are we in a recession?
Oh, we're definitely in a recession. I would focus everyone's attention tomorrow on how big the inventories build, which juice up the GDP number, but speaks nothing to final demand, which is shrinking rather dramatically. And as to the dollar getting stronger, I fear it's only because the Europeans are now rolling into a recession, and therefore they're going to have to start cutting their rates into 2009, knocking down the differential between these two sets of rates, and that the rest of the world is going to suffer through this because we've let this go too far, too long. And as far as the Fed's concerned, they are apologists for growth. He will leave rates as low as they are for as long as he can because he fears a depression. That's what he only knows. And unfortunately, he's taken his eye off the key issue, which is that housing has still got to go through a massive correction. The financial system needs to be fixed. It's all about reserves and deposits, not where the rate is. And unfortunately, he's let the cat out of the bag for the inflation bout we're suffering through.
Jerry Bowyer, first of all, I want to ask you, Joe B. is convinced we're in a recession. President Bush is not. Yep. Where do you come out on that little sidebar issue?
Well, I don't know. I mean, was that Joey B. live, or was that Joey B. April of 2007? Because he sounds exactly the same now as he did then.
And I'm exactly right as I was then.
He was absolutely sure that we were in a recession a year ago.
Gentlemen, if you're going to argue...
Every time he was on the show, he was absolutely sure that we're in a recession.
No,
and
roll
here we
the
kept
tape back.
producing these positive GDP numbers over and over again.
No, the fact of the matter is I said that we were going to have a contraction in housing, that there would be a crisis with credit that would spill into the economy, and we would have a recession. That's what I said. That's the forward look a year ago. Now that you're in it, why don't you step up and be counted at a 0% growth rate? At a 0% growth rate in an economy that should grow at 5%, how could you sit there and tell the American people that everything's fine?
So wait a second, Joe, let's get this clear. Are you standing by the statement that anything less than 5% real GDP growth is a recession? Is that your definition of victory on your recession call?
Go out in the street and ask people what the condition of the job market is, what the condition of prices are, what their attitude is, and you'll discover the truth. The truth is this economy is receding.
Saying that we had already entered a recession.
Gentlemen,
now, I'd
the
like
economy is contracting.
You spent all of 2007 saying we already are in the recession.
I said in August of 07.
Hang on a second. I want to go back to Herb. I want to talk foreclosures. I'm going to be fair and objective, Herb, because that's a point you've raised many times. And we had a bad report today from Realty Track